Good morning, and thank you everyone for joining us on the 2014 session wrap-up. My name is Susie Brown. I'm the Public Policy Director here at the Minnesota Council of Nonprofits. First of all, we'll just share a little bit about public policy here at MCN. Our role is twofold, at least. We support individual nonprofits in Minnesota's nonprofit sector to be their own voice in the public policy process. And we provide training and advocacy and lobbying, serve as a resource to policymakers on the nonprofit sector, and advocate on issues that impact all nonprofits, such as incentives to charitable giving, nonprofit tax exemptions, lobbying rights, and election activity. In this webinar today, we'd really like to cover both of those areas, some of the work that we've done around issues that impact all nonprofits, as well as really highlighting and hearing from you about bullet point number 1 there, which is your own voice, the nonprofit's own voice in the public policy process. So we'd like to cover a variety of things that include both the work that the nonprofit sector has done on their own and work that we've done on behalf of all of you, and other things of interest to the sector. Today, the presenters will be myself, I'm the Public Policy Director here, and my colleague Nan Madden, who's the Director of the Minnesota Budget Project here at the Council of Nonprofits. We also have a special guest in the house today. Naomi Munzner is from the Office of Grants Management, and she's going to jump in about 2/3 of the way through and just share a little bit about a law change related to grants and contracts in the state of Minnesota. Today's learning objectives for the next hour are as follows. We'll start by just covering a few basics of the 2014 legislative session. You'll have an opportunity to learn about major tax and budget policies that were adopted. You'll have an understanding of the policies that impact nonprofit organizations and your operations. You'll learn about the policies advanced by nonprofit organizations. And we'd really like you to share information about what you and other nonprofits worked on this legislative session. One of the things that's important to us here at the Council of Nonprofits is to really know the extent to which our members in our sector worked at the Capitol and got things done on behalf of their communities and the people that they serve. And it's not really possible for us to know all of that as soon as session ends. We count on you to let us know. So what I'd like to do is invite all of you to really actively use the chat option during this webinar in a couple of ways. One certainly would be to send in your questions. If you have questions as we're talking, please send them in. We'll see them on the screen, and then we'll either answer them right in the moment if that's appropriate, or we'll save them to answer later if that makes sense. But we would also like you to use the chat option to share with us successes or things that you worked on in the legislative session, so we can make sure to get a good catalog of those things as we wrap up the things that happened in 2014. Okay, first of all, a quick session overview, and many of you probably know most of this, but in case not, we'll all get on the same page here. We started this legislative session by understanding that there would be a budget surplus, which was $1.2 billion. And although it is not a budget year, that triggers some spending decisions as opposed to cutting decisions. And Nan will talk about those things shortly. This was also a bonding year, as is always the case in even-numbered years. And we'll talk a little bit about what happened in the bonding bill later. This is the second year of the biennium, which means that some bills carried over from last year, and things don't carry over to next year, although they certainly could be reintroduced. As most of you probably know, the House of Representatives and all of the statewide offices are up for election shortly. So that includes the Governor, Secretary of State, Auditor, and Attorney General. And the upcoming elections always kind of add a little something to the dynamics of the session as well. We often hear about retirements from some of these offices. I think there are a dozen or so retirements from the House, and our Secretary of State is not running again, so that always adds a little dynamic. The Senate, on the other hand, is in the middle of their 4-year term, and as you all probably know, the Democrats have been in control for the last 2 years of the House, the Senate, and the administration. So that's a little bit of background. We thought we would start this session by talking about budget and tax, and then we'll move after that into policy issues. So I'll turn this over to Nan Madden, our resident budget and tax expert. And I didn't say in the beginning, but I shall say so now. For those of you who tweet, we have a hashtag, MCN Session Wrap Up. Tweet away. Nan.
All right. Thanks, Susie, and good morning, everyone. So as Susie mentioned, it was not a budget-setting year for the state in 2014. We do run on a 2-year budget cycle here in Minnesota, and so policymakers had set that budget last year in 2013. And 2013 was a very different kind of year than 2014. You might remember last year the state was facing a deficit, and policymakers at the time that they set the budget, they passed a tax bill to raise revenues to fill in that deficit, but also made some new investments. And, you know, a lot of that went to education from preschool to college. But this year was very different. The surplus, or what we budget geeks like to call the positive balance, really did open up the opportunity to have a different kind of budget conversation. But again, any tax or budget decisions that were made this year were can be thought of as kind of tweaks or adjustments to the overall 2-year budget passed last year. So when we saw the February forecast, which is the numbers that really provide the baseline for understanding budget and tax decisions in the session, it showed a $1.2 billion positive balance for the 2-year budget cycle we're in right now, fiscal 14-15, and also a $2.6 billion balance for the next biennium, the out years, 2016-17. Now we like to also take a look at any future budget numbers taking into account the impact of inflation on the spending side of the budget, which recognizes the fact that, of course, to provide the same level of service does cost more year to year for inflation. But even when we take that into account, we see a $1.5 billion positive balance in the next budget cycle. So with that surplus, policymakers really got an opportunity to talk about making some tweaks, and really they started the session talking a little bit about how much they might use that surplus to make changes to the tax system, how much they might use for spending, should we further build up our budget reserves, and should we leave some of that surplus unspent, what's called on the bottom line, which might be a good idea, recognizing the fact that those surplus dollars were primarily a projection. It wasn't money in the bank sitting around, but rather a projection that if we left everything the same and if the economic projections were correct, at the end of the biennium we would have $1.2 billion more that came in than got spent. So what they ultimately did, and I'm going to talk big picture here and then we'll go into a little more detail. Overall, by the end of the session, 45% of the surplus for this biennium went to tax cuts and increased aids to local governments. 21% was allocated to new spending through the supplemental budget bill. 16% was used for the capital budget. So Susie mentioned that it was a bonding year. Usually capital investment projects are funded through the bonding process where the state borrows and then pays that back over time. But also this year, there was what is kind of colloquial called cash for bonding, where instead of using that bonding process, the state just uses, it pays cash for capital investments of various sorts, so 16% of the surplus went there. We used 12% to build up the state's budget reserve, sometimes called our rainy day fund. 3% on other bills that had a budget impact but traveled separately from those major budget bills. And then we did leave 3% on the bottom line or unallocated. So another way to look at the big picture for tax and budget is to look at the general fund impact both in this budget cycle and the next one. So the chart you see right now, that first middle column that says FY 2014 and 15. It's that same data that you just saw in the pie chart, but in a different format. But then this also brings in what is the impact in the next budget cycle, 16, 17, sometimes called the tails. So there you'll see, again, policymakers chose to put $150 million in our state's budget reserve. And then that's kind of a one-time cost. If you look through this list, and there's some items that the cost to the state grows over time. So tax cuts is an example of that. Cost $550 million in this budget cycle, but over $1 billion in the next. But some get smaller, like that capital budget, that cash for bonding is primarily an expense in this biennium only. And then we left $567 million of the out biennium surplus on the bottom line or unallocated. So we'll talk about some of these pieces in a little more detail. I'm going to start with tax. That's where I spend a lot of my time, so I'm going to start there. So tax decisions got done in a somewhat unusual way this year. There were two separate major tax bills with a really strong focus on taxes really from the very beginning of session. And I'll talk a little bit about why that was so, why we had two tax bills. But I want to first have a quick reminder of like what the tax decisions this year were building on. So in 2013, policymakers passed a very significant tax reform bill that addressed two problems that the state had been having. First of all, that 2013 tax bill raised new revenues to end that cycle of frequent budget deficits that we had seen for more than a decade. And also it sought to make the tax system less regressive. So in tax lingo, when we say a tax system is regressive, it means that people with high incomes pay a smaller share of their incomes in taxes than people with low and middle incomes. And really that 2013 tax bill sought to narrow that gap in the share of income that high income people pay in state and local taxes and what other Minnesotans paid. So in 2014, there definitely was less pressure on the how much revenue was the state bringing in, less of a concern that we needed to raise new revenues. But there still was a lot of interest in making the tax system work better, both in terms of that regressivity, but also some things to make the tax system a little simpler and less complicated. So one of the things, there were two things going on that really was creating some momentum to move an early tax bill to make the tax system work better from some folks' point of view. As I mentioned, obviously the surplus created an opportunity and an interest to talk about tax cuts. And then there were two categories of potential tax cuts that had shorter timelines than the usual legislative process. One is federal conformity on income taxes, and the second was some issues around what are called business-to-business sales taxes. So the first one of those, income tax federal conformity, which sounds really technical, but all it means is that Minnesota uses the federal income tax system as the starting point for our state income tax system. So if you think about when you do your taxes, the first question on the Minnesota tax form is copy over a number from your federal tax form. So when the federal decision makers make decisions that change definitions or deductions in the federal income tax system, Minnesota policymakers have to decide whether we also want to update our state income taxes to match, and we call that conforming to federal tax law. In general, federal conformity makes things simpler for taxpayers and for administering the tax system, but we don't always conform. Sometimes Minnesota policymakers might think that the decisions made at the federal level are not ones that they agree with, but also sometimes conforming to federal changes costs the state tax revenue, and with the state needing to balance its budget, sometimes that raises a concern. So if you remember, the legislative session got a late start this year, starting at the very end of February, so that meant people had already started filing their income taxes for the 2013 tax year. So that meant any decisions that policymakers wanted to make this year that affected the 2013 tax year needed to happen sooner rather than later, so they could be taken into account as people were filing their taxes this year. And there was a fair amount of interest in doing some federal income tax conformity of various sorts from the governor and the legislature. And in fact, the House held a hearing on federal conformity on the very first day of the legislative session this year. The second thing that created pressure for early action on a tax bill was that some policymakers were very interested in repealing 3 sales taxes that some businesses pay when they buy certain kinds of services that was passed in 2013. And these are kind of shorthand name for these things are B2B or business-to-business sales taxes. Well, one of those 3 B2B taxes was scheduled to go into effect on April 1st, 2014. So Governor Dayton and House leadership were interested in using some of the surplus to repeal those 3 business-to-business sales taxes, and they wanted to repeal them before the warehousing tax went into effect. It's a lot of work for taxpayers and for the Department of Revenue to get ready to collect a new tax, and they didn't want to go through all that trouble and have the tax be in effect for like a month and then repeal it. So that created some pressure to get a tax bill done sooner. Now the Senate was in a little less of a rush. They were less convinced about the need to repeal the business-to-business sales taxes, which was a provision that they had supported in the 2013 tax bill. And they also were not, they didn't start the session convinced that if the state was going to do tax cuts, that federal conformity was the highest priority place to do that. So it did take a little while to get to agreement, but eventually what's been called Tax Bill 1, or House File 1777, was passed by both bodies of the legislature by March 21st. The Senate had added in some items they were interested in that included cuts to the estate tax and that boost that happened to the budget reserve. But they did get it done in time and before the end of the filing season and before that warehousing business-to-business sales tax went into effect. So some of the big pieces in Tax Bill 1 were that $150 million increase to the state's budget reserve. Many policymakers, and we agree that it was important that as we've come out of this cycle of frequent budget deficits, that we start to prepare for the next eventual rainy day that the state will face. And experts had been saying for a long time that our budget reserves weren't really big enough to be up to the task. So there also was some changes in that tax bill that created a larger target for the size of the budget reserve. The rest of House File 1777 made $443 million in tax cuts in this budget cycle and over $1 billion in the next. It did include a number of federal conformity items for the income tax. One of the larger one addressed adopting to a federal tax change that affects married couples who do not itemize on their tax bill. And then also something we worked on quite a bit is some marriage penalty adjustments in the working family credit, which is our state's version of the federal earned income tax credit, and also some other improvements in the working family credit, so that those taken together are about a 25% increase in that credit, and that's a really critical tool that the state uses to address regressivity in our tax system. They repealed the 3 business-to-business sales taxes. They also repealed the gift tax that was passed last year and made some cuts to the estate tax as well. After that first tax bill got passed, policymakers got to work on a second tax bill. So Tax Bill 2, which came to be known as House File 3167, is much smaller than the first tax bill. And while the first tax bill really focused on income tax, estate tax, B2B, and the reserves, Tax Bill 2 focused on the property tax, sales taxes, local economic development provisions, and then other kind of technical things in the tax area. So that second tax bill passed at the end of session, It costs $103 million in this budget cycle and $119 million in the next, and that's through a combination of tax cuts and increases in aids to local governments, primarily cities and counties. On the property tax side, there are one-time increases for this year in property tax refunds for homeowners and renters, also known as the renter's credit, and also some property tax reductions for farmers. And then, as I said, some additional state aid to some counties and cities through aids to local governments. When we look across the two tax bills, we were really pleased to see a couple of provisions that are very important to continue to make our tax system less regressive and more based on income. And the working family credit and the renter's credit were really key pieces of that. And I think we will see when we come back next year, though, whether the size of these tax cuts was the right choice or whether they might have gone a little too far, as the total tax cuts is over $1 billion for the next budget cycle. I'm going to switch over now to the budget side of things. And as I said, the main task of setting the budget was completed last year, but again, the surplus created the opportunity for some limited additional investments. Most of the new spending items passed the session were in what was called the supplemental budget bill. So policymakers did decide this year that rather than separately discuss a health and human services funding bill, education funding bill, judiciary funding bill, they passed those bills individually, but then put them together into one supplemental budget bill that got debated all together. $262 million of additional spending items in this budget cycle and $850 million in the next budget cycle, but I will talk a little bit more in a minute about how much of that increase in the next biennium is really a shift rather than an increase in new spending. So as I mentioned, the supplemental budget bill covers all the different spending areas of the state's budget, and I won't go into them all in detail. Some of the pieces that we were watching at the Minnesota Budget Project included in the Health and Human Services area. That includes the 5% campaign, which is a 5% rate increase for home and community-based services for seniors and people with disabilities. Also in Health and Human Services, there was some increased access to education opportunities for parents who are involved in the Minnesota Family Investment Program. There's funding for some grants in the health area focused on health equity. On the education side, there's a $23 million increase on the general education formula on a per pupil basis. Additional funding for early learning scholarships, and also funding for things including reduced price school lunches, the Northside Achievement Zone, and the St. Paul Promise neighborhood. And I know we're looking forward to hearing from all of you a little bit later in the webinar about the various things that you all worked on that may have been included in the supplemental budget. So just the one thing I wanted to note in the Health and Human Services area and the increase in the next biennium, much of that is not new spending, but rather shifting some healthcare spending so it is funded by the general fund rather than the Healthcare Access Fund, and that's reversing a shift in the opposite direction that happened in 2013. So that number is a little misleading if you think about it in terms of an increase in new spending. It actually is more about which of the state's funds, which of the state's funding accounts is responsible for funding some health care. So I'm going to stop there and turn it back over to Susie.
Great. Thanks, Nan. Certainly the budget and tax context is so important as we understand the action this session. I'd like to spend some time talking about what I've titled here nonprofit-related bills. And these are basically things that in our sector we all need to be aware of. Some need to be aware of more than others, depending on the specifics of our organizations, like whether we get state grants or contracts, and whether we work in fields where background studies are required. So I'll just go through a few of these things at a fairly high level, although on several of them we have additional information that you can access if you'd like more details. The first one I'd like to talk about is called B Corps for short, or benefit corporations, or social benefit corporations. Actually, this slide is titled Nonprofit Related Bills. I'd say this is related, but it is not a direct nonprofit impact. But it really is the kind of thing that's kind of snuggled up to us in the sector. So basically this has established a new corporate structure in the state of Minnesota where an entity can incorporate with a purpose, with a social purpose that is combined with their profit-making purpose. These are not nonprofit organizations. These are for-profit organizations. But in their incorporation, they establish that in addition to their for-profit purpose, they are going to advance a social purpose. And there are some legal reasons why some folks in the community thought that having a new corporate structure would help these entities do both a social purpose and a profit-making purpose. So we're going to be doing some education on this issue in various ways in our upcoming newsletter. There are probably going to be lots of opportunities to hear panel discussions about this and sessions at our conferences and things like that. It's really there's a substantial interest in this from the legal community and the folks in the legal community who provide assistance to people who are incorporating and deciding what kind of corporate structure is going to be appropriate for their entity. So if you're interested in more information, that would be another resource. But the thing that I think is important for nonprofits to know is that we are all about social purpose. We're not at all about profit. And we may find that in our communities there are some new entities that in some of their activities may look like us. They may be doing some things that are similar to us or have some objectives that are similar to our work. But they're actually set up really very differently, and they're profit-making entities that are also engaging in social purpose activities. So in some ways they're really different. In some important ways they're really different. They're not likely to be our competitors for foundation grants, for example, although they could be our competitors for kind of public interest, you know, who's interested in the food shelf and whether it's being run by a nonprofit or for-profit. So we're interested in watching this. We have taken a neutral position on this from its first time it was proposed a couple of years ago. We think it's great if more people want to do more good work in the community. But these are not nonprofit organizations. If anybody would like additional information on this, please feel free to call me or watch our next newsletter. In the second tax bill, there were some fundraising changes which I'd like to mention. There are some technical details about how fundraising and taxes interact that have been changed, and one of which we expect will be further changed. The first one is that for certain kinds of fundraising activities, there is when you sell things, this is the one that I think of as the chocolate bars and wrapping paper bill, or for those of you who have kids in sports, the new thing is the butter braids, these frozen treats that they sell. Anyway, these are organizations that are usually PTAs, sports organizations, things like that, that sell items for fundraising. And there has been a threshold that has been in place since the 1980s that you can sell up to $10,000 worth of this stuff, this wrapping paper or whatever, without collecting sales tax on it. And that hadn't been updated in many, many years, so that was updated to $20,000. Another thing that was in the second tax bill is that fundraising events that raise money through, let's say, things like concerts where you bring in a big, I don't know, big famous person, and all kinds of other fundraising events. There are some rules about how many times you can do these fundraising events before you start collecting taxes on them. And there were some changes in the definition of what is counted as a fundraising event. Our organization, along with some arts organizations, worked throughout the session with the Department of Revenue to try to sort out the right definition that would work for nonprofits. And we didn't actually quite get there. So there is some new language in the tax bill which defines fundraising events in a more specific way than it had been defined in the past, but in a way that both we and the Department of Revenue think is open to continued work. So the Council of Nonprofits is going to continue to work on this in the interim. If there's anybody out there who's been paying attention to this issue and is interested in continuing to work on this with us and the Revenue Department, please feel free to be in touch with me directly. We'd love to have your input. The next item is where we're going to bring in Naomi. The Office of Grants Management had a bill that passed, and for those of you that have state grants or contracts, Naomi's going to tell you about the change.
Thanks, Susie. I'm Naomi Munsner, Director of Office of Grants Management at the Department of Admin. And so, as Susie mentioned, we had an unsession bill that was passed, Chapter 187, House File 2217, and it updates provisions in the grants and contract management process. What it does is it provides an optional 60-day exception in the grant process for encumbrances in our state accounting system, known as SWIFT. And what it allows the opportunity to streamline the grant agreement process for a subset of grantees, and those are grantees that are legislatively named and non-competitive grants. So the purpose was really to look at how do we enhance our customer service and flexibility with our grantees that allows for, once we have an approved work plan and budget at the agency level, we have a 60-day time period that allows us to do the work we need to do inside, that also allows that grantee to incur eligible expenditures and then be reimbursed for those once we have officially executed that grant contract agreement. So we really wanted to look at how do we streamline this process for this particular subset of grantees. So again, non-competitive, legislatively named. So thanks for having me here, and I'm brief, and then we'll have some additional info that can be sent out.
Great.
Thanks.
So as those of you who've been on our webinars before know, we send out an email after, and in that email we have some information about what Naomi just discussed and some contact information for Naomi at the Office of Grants Management. So this issue certainly doesn't affect all of you on the call, but for those for whom this is an issue, I hope that the information that we send as a follow-up is helpful. The final 3 bullet points I'll talk about here are really about our role in the nonprofit sector as employers, and there are some substantial changes. I'm sure many of you know from reading the news that there was a minimum wage increase passed, and that minimum wage increase will raise the wage to $9.50 phased in by August 2016. And there are some things in here that are details important to know about the difference between large and small employers has been somewhat changed. There are some exceptions for things like training wages and such. So this is something that's before us as employers. And I'm going to talk a little bit about the Women's Economic Security Act too, but I want to call your attention to, we will be holding a webinar with an employment lawyer on June 17th at 2 o'clock, and this is where we hope you'll be able to find the really important legal and practical information that you'll need in order to implement the requirements of both the minimum wage increase and the Women's Economic Security Act. So I'm not going to go into all those legal details about implementation today, but we hope that that will be a helpful webinar. The Women's Economic Security Act also passed and affects our role as employers. This includes lots and lots and lots of things. There are some provisions related to pay equity. There are provisions related to accommodating the space needs of nursing mothers. There are provisions related to an expansion of the definition of sick leave and how that's applied. Lots and lots of things related to women in the workplace. This is a really important thing for us to look at as nonprofit organizations, figure out which pieces apply to us and how we can implement them. Again, this is something that will be covered on June 17th, and we hope that you join us for that. The final thing, as employers, and this doesn't affect all of us, but it affects those organizations where a DHS background study is required, so people whose organizations work with, vulnerable adults or children or others. There was a change in the background study law. This was initiated by the Department of Human Services. And actually, we wrote about this in our newsletter in, I think it was November or December, and we're asking for people to give input to the Department of Human Services on this change. So I hope some of you or your colleagues in the field had the opportunity to weigh in on this. Basically, this does not change who gets background studies, but it does make some changes to the how. And the purpose is really to expand the portability of background studies between employers and give some opportunity to employees to initiate their own background studies and sort of carry them between employers. There's some cost savings for both employers and employees in this new portability of the background study. There are also some new requirements and some things that people are offered to kind of opt in to give more information in order to expedite the portability. So this is a fairly technical issue. It affects some organizations and some it will affect in a very big way. And so we suggest that you watch for information from the Department of Human Services. And I assume that that department will be in touch with everybody who currently has background studies, and that they'll share some updates. If people are interested in looking at the actual bill or reading the House Research Bill Summary, it's House File 2467. Okay, so that's an overview of the things that really affect us kind of in our operations. I'd like to talk about a couple of things that did not advance. There are two here, and I have a third. For the last legislative session and some sessions before, we've done a lot of work on an issue that concerns us that would expand the opportunity for local units of government to implement fees to pay for certain things like street maintenance. And those fees, because they're fees and not taxes, would be applied to tax-exempt nonprofit properties, which concerns us. So we've been working to oppose that in previous sessions successfully, and this session it did not come up again. So it's an issue that did not advance, but it's certainly one that we'll be watching in the future. At the end of the legislative session, there was an issue that came up which we raised some concerns about, and it eventually did not advance, but I'd just like to call your attention to this was in the bonding bill in the House, and this would have given local bonding authorities the authority to place somebody on the board of directors of a nonprofit organization that gets bonding for $5 million and above. So this was a substantial concern of ours for a variety of reasons related to governance and the role of nonprofits, the relationship between nonprofits and government, and the expectations that come along with funding. So this raised a serious concern for us, and we had some good conversations with the author, and this did not advance, but it's certainly something we'll be watching in the future. Another idea that did not advance doesn't impact 501c3s really directly, but it was talked about as a nonprofit thing, and this was some changes to the campaign finance rules in the state of Minnesota, and actually there was a blog that said that it limits the speech of nonprofits, and I got a lot of emails about that. This is something that was really, it came from the Campaign Finance Board themselves, and really trying to change some of the ways that reporting and disclosure occurs for election-related activities that are carried out by 501c4 organizations. So for some of you who work at 501c4s, you might have been following this closely. We certainly were following it closely because sometimes when there are changes for C4s, there's kind of a spillover effect for 501c3s. And the Campaign Finance Board was certainly very responsive to our concerns and input. And this, in the end of the day, was something that was not likely to have a direct impact on 501c3 organizations, but it was talked about as a nonprofit thing. So if you see something like this in the future and it's discussed as something that's concerning and limiting of nonprofits, please remember that this is about 501c4s. I do expect that it will come up again in future years. It's of great interest to the Campaign Finance Board. Okay, one of the things that's really important to us here at MCN is to recognize and learn about the work that nonprofits have done that have advanced important policy issues in the legislature. So these are not necessarily things that we worked on, but that you worked on. And this is where I would love your input. Type things into the chat if you worked on things. This is not meant to be exhaustive. This is a sample of the good work of the sector. Please help us augment this list. A few things I'd like to just share. Very early in the session, you might remember that there was a bill about school lunches. This was something that it goes by LSAP. What does LSAP stand for? Legal Aid, Legal Services Advocacy Project. We get so used to our acronyms. Really worked on along with many others. This was an interesting example of a policy issue that seemed to get lots and lots of traction after a nonprofit organization did some research and put a report out to the media. So a good advocacy strategy. The Safe Schools campaign, also informally called the Bullying Bill, passed this legislative session with strong leadership by Outfront Minnesota, who's been working on this for a long, long time. So congratulations to them. Nan mentioned the 5% campaign. This is something that we signed on to, supporting increased reimbursement rates for caregivers in the communities that serve people with disabilities and elderly adults. And this was carried out with incredible coalition leadership in the disability community. So congratulations to all of them. There was a quick, right in the beginning of session, heating assistance increase. Actually, I don't know which organization spearheaded that. I suspect Legal Aid might have been involved. If your organization made that happen, please let us know. There were many bonding projects that got funding this year. Lots of them tend to be in the arts. The chair of the bonding committee is a strong supporter this year of the arts. Also, there are many human services organizations that will be funding their building expansions through bonding. And all of those required lots of advocacy. Also, big congratulations to the Minnesota Coalition for the Homeless, MCCD, and other housing organizations that succeeded in securing $100 million in affordable housing bonding. And those projects, the specifics of those projects will emerge eventually, but money that will be used for affordable housing. And then I'd like to give a shout out to the Steve Rumler Hope Foundation and Minnesota Recovery Connection, which worked to pass Steve's Law, which grants immunity to people who assist folks having a drug-related overdose by calling for help. And it provides people the opportunity to have and administer the antidote to opiate overdose. So this is something that's been really important to the recovery community and certainly could save lives in Minnesota. So somebody has shared with us that before there had been only $37 million ever given per year for affordable housing before this year. So the $100 million that came this year is a huge increase, and congratulations to everybody who worked on that. So we'd like to know what you worked on and what else has occurred through the session. You can let us know, and we'll try to give you a shout out on the webinar today, or maybe write about it in our upcoming newsletter and share it in other ways. You can do that in two ways, through the chat box or tweeting MCN session wrap-up. Also, I'd like to call your attention to the fact that we give mission awards in several categories: advocacy, philanthropy, anti-racism, and innovation. And we give those at our annual conference in November, and we hope that they provide a nice spotlight on organizations and perhaps a little boost as you seek to find support for your organization. These proposals or these nominations, you can also self-nominate, are due on May 30th, coming right up next week. But as you're feeling good about the end of the legislative session, or you've observed great work of your colleagues in the field, please do consider a nomination for the Advocacy Award, the Advocacy Mission Award.
And Susie, it looks like in the chat people are on the call are providing some more information about that housing bonding and how people can learn more about connecting to that.
Okay, we're going to go to the next slide here. Okay, so I'd like to just share some of the upcoming events that might be of interest to you. We're having a live event. We've done webinars thus far in 2014, but we're shifting our advocacy training to in person for the rest of the year. On June 17th at 8 a.m. at Goodwill Easterseals on University and maybe Fairview-ish area, we're doing a session called Working with Congress, and we have congressional staffers who are going to join us in a panel discussion type situation where we'll hear about things like when is it best to work with the district office versus the D.C. office, and should you really do those fly-ins to Washington, and how do you get to the right person, and stuff like that. We hope you join us for that free event. As I mentioned, also on June 17th at 2 o'clock will be a webinar on the minimum wage and the Women's Economic Security Act. Please suggest if you have an HR person or a director of administration or something like that, that they sign on to this webinar. We're actually just putting the pieces together for that now, and so we don't have it up on our events page yet, but we will send that information in a link to all of you. And you will also, if you get regular communications from us through the Nonprofit Advocate or Smart Nonprofits, you'll find that coming your way, and you'll see that on the website shortly, we hope. On July 10th, we're doing a training here in the MCN conference room called Policy Planning with Your Board. You can find that on our website. If any of you have struggled with questions like how does our board take a position, what is the board's role, what do we do if our board thinks we can't do this work, please join us for that event. And then you'll see the remainder of our events for the fall, focused on elections. Follow the Dollars will be NAN, and Evaluating Advocacy on October 23rd. So we'd like to be of assistance to you in an ongoing way, and right after this webinar, if you have specific questions, our contact information is there, and you can also subscribe to our blogs and updates on our website, and you'll get information from Naomi in the email that follows. And thanks very much. We've got a few things. Scott on the chat says, the Minnesota Department of Human Rights is currently working on guidance on the parts of the Women's Economic Security Act that the department will be implementing. Thanks, Scott. That's really helpful. So I think we'll get information on that from a variety of sources. Other things from the chat, important to add. And resources for Minnesota Housing and Finance Agency. Lots of great stuff this year. We really thank everybody for their work this legislative session. We know that this is always collaborative. We appreciate collaborating with you and watching the great work that you do. Please don't hesitate to toot your own horn a little bit with us. We'd love to know about your good work. And if you'd like to follow up with either Nan or myself or Naomi with questions about any of the content that we covered today, we'd be delighted to hear from you. Thanks so much. We're going to sign off a little early. Enjoy a free 10 minutes in your morning. Thanks, everyone.